Okay, good morning everyone. We're going to start our morning webinar. I'm Kenneth, the market analyst. Today we'll be going through just a quick recap on the market, and following which we'll have our real estate analyst Caroline to introduce OSIM to us. Okay, so without further ado, let's start. Okay, outlook for the market. Okay, let me just draw your attention to the points in bold. Okay, so anyway, the outlook for the market, our year-long thesis that started in the end of December was this. Okay, we start with the U.S. market. Okay, because it's the biggest market in, global market. Now the probability is that the U.S. Market, the bull market, has not ended yet. So we're still within the context of a global bull market. Okay, that's our first thesis. Second, but just because we are still in a long-term bull market, that does not mean that there will be no meaningful correction. We think that there will be a correction, okay, but if there is a correction, we do not expect the correction to be more than 20% of the share of the index price. Okay, the reason is because we are still in a bull market, and based on historicity, right, we find that meaningful corrections within a bull market, on average, they high probability do not exceed 20%. Now, these points to verify, these sub-points that verify our thesis was actually done before, so I won't talk about it again today. If you're interested to see the more detailed explanation as to why we believe the US is in a bull market, because of intermarket analysis, because of valuations, because of the having no inverted yield curve and no negative catalyst, you can refer to the webinar, extended TA webinar that was given on the 10th of February. Okay, this gives you more details on our thesis here. Okay, so now I'm just going to recap them. Okay, so one, the bull market is not ended yet. Two, most likely will have a meaningful correction. Three, in December last year, I said there will be probably two corrections, or rather two more significant corrections, one minor one and one more major one. Now, I said it was going to be likely to be in February and May-August region. The one in February has already came, as you know. In fact, it came a bit earlier. It started in late January and not February. Okay, but it happened. Okay, and so now essentially I'm waiting for the next one. Okay, so what then can we say about our action? Okay, well, the thesis is still the same. I would still advocate a sideways trading strategy till middle of the year. And then after a significant or meaningful correction, we can prepare for a bullish move after that. Okay. Now, even though the US has a meaningful correction, the STI should be affected, but to a lesser extent. Now, in the meantime, before the meaningful correction starts, I think because of attractive valuations and short-term cycling of the STI, I think that STI actually has a chance to cycle up on a short term, to go up until the meaningful correction in S&P starts. Okay, so with that, let's look into the market itself to see whether we see hints or signs that this thesis is still intact. So here's the shorter term outlook for the market. Okay, so here is the chart of the S&P 500 weekly. Now, since I gave a thesis in the beginning of the year that likely May to August will have some weakness, in order to see, we still need to monitor this, every month to see whether this thesis is still intact. If there is going to be a more meaningful correction later this year, then we should expect to see weakness building up in the market itself. And do we see that? Well, it seems that as of this point we still have that. Okay, this is the weekly chart of the S&P. Now we can see basically there are divergences in momentum. RSI and the MACD are having divergences, meaning as the price goes up, the momentum actually goes down. So this usually is a common symptom of weakness building in. Similarly, our breadth indicator shows minor weakness. So we got divergences in momentum and minor divergences in breadth. So this does show some weakness heading into this consolidation over here. So even though price can still go up from now, I still expect there to be downside pressure. Okay. Now let's delve deeper and look into the daily chart. So here was the weekly chart. Now let's look closely at the daily chart. Now on the daily chart, okay, we see a bit more clues as we look closer. One, we can see that even though price at this point, price is testing the 1840 support like this, right? So you can see it's consolidating around this area here. But in this consolidation, okay, you have two choices. Either it breaks up or it breaks down, right? The signs show that the probability is more towards the downside than upside. So I think that even if there's upside, I think the upside will be shortly lived. Okay, why do I say that? Well, okay, so you got the classic MACD cross over here. This is very basic. Anyone can tell you that. But more importantly, right, we see a few more other things. Okay, another basic sign is that we had this reversal candle over here, followed by heavy volume all of a sudden. So this usually is an ominous sign that there could be more weakness coming down. But looking at our breadth indicators, okay, we see that even though price has been consolidating here, you see that the Russell has been tremendously underperforming versus the S&P. So even though price has not broken down here, this relative performance has already broken down. So there is actually more weakness in this price than we can actually see. You can say the same thing for this breadth indicator, the SPX A50R. Price is not broken down, but this one actually has. So because of these, I'll say that downside probability is higher than upside probability. Okay, so that was for the US market, okay? But at the same time, until price actually breaks down the 1840, right, I cannot confirm to say the down cycle has started. I cannot. So right now it's still consolidating, okay? Now, what about the SG market? Now this was the last time I was on, this was the last slide I did, February 10th, okay? Now, at this point here, I did say that we are in the support zone and the short-term bounce is likely, even though the intermediate trend is down. So since then, okay, what do we have now? Since then, we see that yes, the price has actually bounced off our support zone, okay, as expected. And now this could potentially be a cycle up. Okay, because for a few reasons. One, you can see that the price has actually finally managed to break this intermediate downtrend over here. Okay, that's one. Two, the price is actually on its weekly high. In fact, it's at its 4-weekly high. Okay, so usually when you have a case where when you break a 4-weekly high, that's usually bullish, and it does imply a cycle up, a short-term cycle up, that is. Okay, so because of these two breakages, this is a short-term cycle up. So there's a good chance that price may stay positive, okay, and increase until maybe some very negative catalyst occurs, or if the US starts its meaningful correction. If the US has not started its meaningful correction, it's possible for sentiment to actually keep this positive. Okay. Now, of course, if we can clear 3,300, that's actually pretty bullish. If you can clear 3,300, you'll probably make it to 3,500. Okay, so that's what we have for the STI. So to just summarize, we'll just go down to the bottom. So it's probably good to have a sideways trading mentality till the middle of the year. You could prepare for a bullish move later this year. The STI should be affected, but to a lesser extent. And while waiting for the US to begin its meaningful correction, the STI has a chance to cycle up until that correction actually takes place. Okay, so that's it for market outlook for today. And now I shall pass you to Caroline to talk to us about OSIM.
Thank you, Kenneth. This is Caroline. Today we will be initiating coverage for OSIM. I'm sure OSIM counter is not unfamiliar to most. So let's start on this. First, take a look at the company snapshot. The last closing price last Friday was at 2.59. The 52 range is 1.88 to 2.68. And the market cap currently is about 1.9 billion. The forward P ratio for the year 2014 is about 17 times. The company background. OSIM International Limited was founded by Mr. OSIM in 1980s as an electrical and household appliances company under the name of OSIM Trading. It was it officially launched the OSIM brand name and rolled out its massage brand of the massage chair in 1993. It was later listed on SGX in the year 2000. The principal business of OSIM International includes the designing, developing, marketing, and franchising of the lifestyle products. So they usually outsource the manufacturing to the contract manufacturers. Majority of the products are manufactured by their associates. One of the associates, which they hold 30% of the stake. The business portfolio consists of 3 segments, which is OSIM, GNC/Rich Life, and the last is TWGT. As of December last year, 2013, they operate a wide point of sales network with about 861 specialty retail outlets in 32 countries worldwide. And for OSIM, they actually focus on 5 key markets, which is in Asia, is Singapore, Malaysia, Taiwan, Hong Kong, and China. Looking into the business segment of the 3 business segment, the first one is the OSIM brand. OSIM is the retail arm for the group's healthy lifestyle products. As most people know OSIM for their branded massage chairs. So their flagship product, this is their main revenue generating products, but they do have other related massagers and products too. This OSIM brand contribute about 70% of the revenue, with the massage chair products making up to 40% of the revenue. Next is the GNC Rich Life. It's actually under this only ONI Global, which is the OSIM retail arm for its range of nutrition supplements. They are the sole franchisee for GNC in Singapore, Malaysia, Australia, and Taiwan, and launched the Rich Life brand in the year 2008 in China after they failed to come to a compromise for the GNC franchisee in China then. The GNC and Rich Life contribute about 20% of the revenue. From what we understand, is GNC at least is a cash cow. It is generating stable recurring income for OSIM and has been awarded as the numerous number of awards from the GNC US headquarters. Third portion, which is the TWGT. TWGTE is the OSIM retail arm for its range of luxury tea. OSIM acquired about 35% in the year 2011 and subsequently increased to 45% last year and later on to about 54%. And in Jan this year, 2014, they increased to 70% and currently they hold up to 70% on TWGT. 60 to 70% of the sales are actually derived from tea products and accessory sales, with the balance directly through the in-house F&B sales. So let us look at the investment merit for OSIM. First, as many of you know of this brand, OSIM, it has a strong brand equity and the innovation, products, and the strategic market positioning to drive revenue. Premium branding. They give an emphasis on building the brand while outsourcing the manufacturing of the products. They have won numerous awards like the most preferred healthy lifestyle brand and the preferred massage chair brand in Asia. Their products also won a couple of the Red Dot awards for the product innovation. So for this, they actually built a brand around Asia to for others as this is a brand that you can trust. We create value in this brand. Next, they have a strong product pipeline. As always, product innovation is the key to the OSIM brand consistency and a driver for the revenue growth. OSIM usually launch a new product or a derivative of the existing product every quarter with an aim of 2 blockbuster every year. They will spend about 2 to 3% of the revenue in R&D annually, and they have a team of 30 to 40 people in Singapore on the R&D part to come up to maintain the quality and the innovation in their products. Next, we come to its marketing expertise. For OSIM, they create brand awareness with a couple of marketing strategies such as celebrity endorsement and advertising on the airtime of popular shows, and also online marketing and mobile apps. As everyone know, for celebrity endorsement, the most recent celebrities will be the Andy Lau, which they have endorsed for the at least past 3 years, from the U Divine to currently the U Infinity, and also Semi Ching, which is the celebrity endorsement for the OSIM U Angel. And also they do advertise on popular shows like recently the Voices of China, 中国好声音, and also they also came up with mobile apps for the TWGT for online for mobile purchase of their products. So they hope by these marketing channels, they hope to actually reach out and create more awareness of this OSIM brand. Next, they also adopt a more segmented marketing strategy, which means they adopt a multi-product price point strategy to capture a wider target market. But the most recent example, of course, is the launch of the U Angel, which is targeted to the budget and space constrained consumer, and this has actually they have actually received pretty good response for the U Angel product since launch. With that, they also usually they sell their products through specialty retail stores, which strengthen their brand identity. They operate a network of specialty retail store and franchise outlets to better control its pricing and brand building for their products. Okay, next, we feel that the outlook remains favorable for OSIM because number one, as most people know, China is the biggest market for OSIM, and though China is slowing the economy, but there are still rising China influences with urbanization. Recently, China has unveiled urbanization plan to have about 60% of its more than 1.3 billion people living to move into the urban areas by 2020, up from the 52.6% at the end of 2012. So according to the McKinsey and Company, the upper, middle, and affluent class consumer are estimated to increase from 17% of the household in 2012 to 62% of the urban household in 2022. This group is usually the target group for OSIM. So you can see that the target group is going to increase tremendously within the next 10 years, meaning more revenue for them. Next, we also feel that there's great potential still in the massage chair industry, as the global massage chair market is usually concentrated in East Asia, Japan market being the leading mature market. They have a penetration of over 20% of the household who has at least a massage chair in their house. The penetration rate for the OSIM massage chair is still low for its 5 key market. From what we understand, about 10% in Singapore and Hong Kong, 5% in Malaysia and Taiwan, and perhaps only 1% in China. So you can see that there's actually still potential growth, and of course, with more and more people are being health conscious and would put greater emphasis on lifestyle, we feel that the massage chair market industry do have a further room for growth. Last is the TWGT, which is a promising profit contributor. It is a fast-growing luxury tea brand, and they do, from what we understand, they do have better operating metrics such as sales per store than those of OSIMs. So we expect TWG to contribute at least 10% of the revenue in this year, 2014. Now, let us take a look at the financial figures. As you can see, OSIM has exhibit sustainable growth traction and healthy balance sheet. Number one is they shows climbing operating margin, as you can see in the graph, increasing gross margin, increasing EBITDA margin, and increasing EBIT margin. Main thing is they shifted their supplier base to China in the year 2010 for even their high-end massage products, as the production in China, as the quality in the production for China improves. So this move is to lower the purchasing cost and also to enjoy the benefits of economies of scale from their expanding network accordingly. Next, they also shows improving store profitability. For OSIM, they focus on recently they focus on the store rationalization for the OSIM and the GNC Richlight outlet to optimize the profitability per store. As you can see in the graph, the revenue per store has been showing an upward trend since the year 2010. Next, OSIM is a very strong cash generator. For the past 5 years, they generate a robust net operating cash flow approximately 90 million annually, and it's building up its cash holding. And you can see that the debt versus the cash is actually really improving, and the debt is expected to actually reduce as we feel that majority of the debt currently is belongs to the cash convertible bonds, and starting from this year July onwards, which the option redemption date is approaching, more and more people are actually converting their convertible shares bonds to shares, and this is why we see that we expect it actually will fall. Next, we also like OSIM because they have an experienced management team. The team actually owns extensive experience in Asia, and a majority of the OSIM staff has been with the company for 10 years or more. So it actually shows that with the team with the current team, we do feel that the team will be able to bring OSIM to a better growth in future. Okay, here are some of the financial graph where you can see that the revenue has been growing and the profit margin has been improving. Usually, OSIM as a gauge, they give up about 30% of the payout ratio is about 30%, but for the last 2 years, they actually have given more. In 51% in the year 2012 and 43% in the year 2013. And this graph actually shows the FY13 revenue split by the region. Majority, about half, came from North Asia, about another 40% came from South, and 10% came from others. So what are the risk factors that we see in OSIM? Number one, the weakening of macroeconomies may distress demand. OSIM products are discretionary in nature and likely to face reduced demand during the economic downturns. This is why OSIM has been positioning their target group to the mid to high-end consumer because they are less vulnerable to recession, and so their business will be performance will be less volatile in terms of downturn. Next is the failure to trace the changing consumer tastes. OSIM products are dependent on the consumer demand and are subjected to the changes in the consumer taste. So this is why OSIM has been trying to improve and come up with more products, keep their product pipeline strong accordingly to actually meet the customer demands requirements accordingly. Sure, any one products actually in generating a good which means any one products which is generating a good revenue or so, usually you could see that they will have the upgraded version for this product as it goes on. Competition. Competitors could come up with new product or marketing strategy that would the consumer from OSIM. So for OSIM in this case, this is why they keep coming up with new products, which about four products, one product every quarter, accordingly to keep ahead of their competitors. Last but not the least is the brand erosion. As everyone knows, the OSIM brand is the key success and value driver in its business. So definitely brand erosion will cause OSIM to lose the competitive advantage, and this is why OSIM put such a great emphasis on building up its branding with the celebrities marketing, and they spend at least 6 to 7% of their revenue per year on advertising and promotion to keep their branding strong. Recommendation. We are positive on the outlook for OSIM with the rising wealth in China for urbanization and the potential growth in the massage chair industry. Store rationalization ramp up of the TWGT outlets and the new product launches will continue to drive the earnings for OSIM. We like OSIM for its strong balance sheet with good cash generation due to the cash-based business, low working capital needs, and a high EBITDA margin. We feel that there will also be potential upside for future M&A since the company long-term goal is to develop OSIM brand into an umbrella brand for healthcare and lifestyle products. In short, we feel that what we feel currently is that we feel that the stock may encounter a slight dip in near future due to the share dilution from the convertible bonds conversion. However, valuations still remain attractive because we feel that the fundamentals for the company still remain strong. So we initiate with accumulate recommendation with a target price of 2.87 based on the discounted cash flow methodology. Thanks. We have come to the end of our webinar. You may start posting your questions. Thank you.
Hi, it's a market analyst Ken here. First question we have is when is the next S&P major correction, or the signal on that is happening? Well, the thesis has been on since December, and just to recap what I said, I basically said that there was going to be probably two corrections, one in February and one in the May-August region. This is just based on historical guidelines and seasonality patterns. You can find both guidelines and seasonality patterns in my 10th February webinar, which outlined the thesis. Okay, but of course, just because high probability region is May-August doesn't mean it will be exactly in May. It will be around this time, which is the reason why we have looked into the chart itself to make sure that we have symptoms of this happening. And as I said, there is weakness building up in the price. So all I can say is that May region is highly likely the time for a correction, and that there's weakness building up. Okay, a breakage of the 1840 support, right, will have a potential downside to 1800 at least. Just to let you know.
At the moment, the outcome of the lawsuit is not clear yet, and the impact the company has not disclosed any details yet. So at the moment, we refrain from giving any further comments on the lawsuit accordingly. But as we feel that, as you know, majority of the business actually come from the OSIM brand, 70% as we said. DWG is only expected 10% for this year. So at the moment, we feel that the impact should be minimal, and the company management actually feels that what the other party claims are actually groundless and unmeticulous accordingly. So for now, we are still positive on OSIM outlook in this case. Thanks.
Hey, I got a question from good question here by Yok One. Do you think Nasdaq will lead the correction? That's a very good observation. In fact, right? I mean, I didn't show the Nasdaq chart here, but it's actually implied by this chart over here. This is actually a better measure than just the Nasdaq. I mean, it's the relative performance between the Russell and the S&P index. The Russell is a small cap index, which is actually more sensitive than Nasdaq. So this shows. So this will usually react more extreme than the Nasdaq. So as you can see, this is already broken down. Now, if you look at the Nasdaq, the Nasdaq has also broken down. So you are correct to say that the Nasdaq. I can't say the Nasdaq will lead the correction, but the fact that the Nasdaq has already broken down definitely shows a weakness in the market itself. And considering that we are meant to be in the bull phase, and the Nasdaq broke down, and the Nasdaq is made out of basically tech and offensive sectors, right? That increases the probability that this S&P will follow suit.
Hello, there's a question that asks who are the major fund shareholders in OSIM. For OSIM, the biggest shareholder is the CEO, Mr. Ron Smith, who owns close to about 69% of the shares. The next one is Franklin Resources, which own about 3.5%, and Harvard Port Asset Management, which own about 3.5% accordingly. The next one is, has Phillip Capital invested in OSIM prior to initiating the accumulate coverage on this stock? Sorry, but we don't really have any idea whether Phillip Capital actually invested in OSIM in this case.
There's a question here that says STI run-up seems only contributed by a few index stocks. The broad market is not moving. What is your comment? Well, the thing is, I mean, it's not just a few index stocks. I mean, the thing is, we've been saying for a couple of months now that that the STI should be looked at as a stock picking strategy. So basically means that the underlying economic numbers are quite robust. So you will find pockets of stocks, right, that are undervalued to move up. So the index stocks have been moving up, and that's why STI is moving up. But at the same time, you will find certain pockets of stocks that are also moving up. Okay, once again, there is this overhang, right, about the S&P being overextended. So you might not see a giant move, but that's why I said the STI has a probability of cycling up until the giant move before the meaningful correction might occur. So right now, it's probably best to have, once again, a sideways trading strategy, as I said. If you buy stuff now, which is oversold and has good earnings, you probably would not hold it for too long until the correction coming.
Hi, good morning, everybody. My name is Benjamin here. I have a question on Wing Hang Bank for OCBC. If you guys been monitoring OCBC's current and Wing Hang Bank are currently going through a trading halt right now. There's quite a bit of speculation on the media currently that that they might be undergoing the regulatory approval from the Hong Kong side. Yep. So in terms of how Wing Hang's earnings and profits will help OCBC's earnings in the near term, right? For that, first of all, let us consider Wing Hang's and OCBC's ROE profile. Okay, OCBC's ROE profile is about 11.5% for FY13 ending, and Wing Hang's one is standing about 10.5%. Alright, so in terms of the earnings contribution, if we use FY13 year end for Wing Hang as well as OCBC, the potential contribution is 10% or less, right, for the earnings, in terms of earnings percentage wise. Alright, so for the relationship between Wing Hang Bank and OCBC, right, the main motivation that we see OCBC going for this deal is still to acquire the the branch network that Wing Hang Bank can offer for Hong Kong as well as in the southern China portion. Right, for Wing Hang Bank's portfolio, you must note that quite a large bulk of it is mortgage loans, right, which is not exactly a very bullish outlook on the Hong Kong sector currently. Alright, so I want to emphasize again that for this acquisition, OCBC is really going for the branch network to allow them to gain the access into the Hong Kong market, right? Expanding their commercial banking as well as their private banking arm, but not so much for the residential loan market, which Wing Hang Bank is currently holding in this portfolio. Okay, thanks.
Okay, hi there. Question: any particular stock or sector picks? Okay, well, so now that the STI has a chance of cycling up, and if you want to trade this cycle up, okay, we will just reiterate our top 5 picks, which we think all have their own investment thesis. Okay, so there is Ballstead Singapore. Okay, there's Ballstead Singapore, which is basically industrial play. We have First Resources, which is a commodity play. Pan United, which is an infrastructure play. So these three are three of our picks. Then you have M1 and Silver Lake Axis. So these are our top 5 picks. So I think that if you want to play a short-term cycle up, these three are probably, you can use this as proxies because all of them have bullish theses on them. Okay, so if there's no further questions, then thank you for joining us this Monday, and we hope to see you again next week.